Good day, all. Ira Epstein of Linn & Associates on Fed Open Market Committee meeting day, which is Wednesday, the 20th of March, 2019. And we're about 3:15 p.m. Central Daylight Time. So here we are with a market where the Fed came out in an unusual statement today and said that they don't see rates going up the rest of 2019. To me, that's important. They're giving the market an idea that they're concerned about world economies, and they're also in the process of that by saying it, they drop the dollar, kick a number of other currencies up, which has an impact on the gold and the silver and some of the other markets. The dilemma you have is that the Chicago Mercantile Exchange puts a settlement price in at 12:30 p.m. Central Daylight Time, yet the market trades to 4 p.m. Central Daylight Time. So let me just tell you, you see the market up at 1330. The settlement today, and it's going to change the look of the charts, 1301 and a fraction. This market settled around 1531. You're about 17 cents higher because after the Fed came out, which their statement release was at 1 p.m. Central Daylight Time, the market looked at that, metal market soared. Okay. Let's take a look at what's going on the weekly chart. First of all, remember, while you're at 1330.30, you're going to cut back about $11 of that. It's still a market that's staying over the 18-week average of closes. That's friendly, this market. When we look at the chart action, if we go to yesterday, this market closed at 1306.50. You see that? The settlement today, while we're seeing an outside day up, look at this on the chart. You took out the previous day's low and high. The reality is when your charts close tonight, it should have an outside day down, not up. It screws the chart up, no question about it. So you're going to see an extension of this line not coming down here. It's going to go higher, which is fine with me because what it does, it still keeps in place higher lows, higher highs. That still keeps the bull market still very much alive in terms of does it have a pattern of higher highs, higher lows. Now, if you look at the settlement price, you're going to be under that, under the 18-day average because you're going to be in the 1301 area. I know it sounds like magic, and if you're watching this anytime after I record it after 5 p.m., your charts are going to look one way. You're going to say, what's he talking about? You take a look at the settlements. You'll see that that's what I'm talking about. The good news is, as far as I'm concerned, if the market can hold this, are we getting one of these periods in time where the market can make another run? And if that run happens, wherever the upper Bollinger Band comes in, could be your resistance point. Via the last trade of the day, that's about $17 away, and it's been falling in the neighborhood of $3–4 a day. So it could be in the 1327s tomorrow. I'll be viewing the 18-day average as the overall support. Now the number that you don't want to see taken out on this chart, if you're going to hold this bull attempt, and possibly an inflation attempt up, is not to take out 1292.50. Probably do a metal report tomorrow. Be ready for me to do one. Looking at the market, I'm looking at momentum. The momentum is not overbought. It's getting close to it, but it's not. It'll probably get overbought early tonight. You'll say why? Because when the settlement comes, we know where it's going to close. When it reopens, it's going to gap wherever the last trade is tonight, and I'm talking at 4 o'clock today, the market will probably try to get near that price unless there's some piece of news that comes out to change things, and I'm talking something I don't know about, near that last price. What's a truer chart is the ETF. This one settles at 3, the right way. I'm very critical of these early settlements. I don't think they make any sense at all. Higher lows, higher highs, or is it? I want you to look at this low right here. That's 122.89. The market yesterday up. Today you get down to 122.65 and then you shoot up. So it's not an uptrend as defined by higher highs, higher lows. It is an outside day up. It does have thrust to it as the market is over the 18-day average with bias, but you're going to be in overbought condition very, very quickly. I'm going to be looking for resistance up at the upper Bollinger Band should it get there. In the GDX, you probably culminated a downtrend today. Why? I could actually take this arrow, get rid of it, and now put the arrow pointing up. I will do it for tomorrow's review. You actually have a lower high, rather a lower low and a higher high. This chart is correct. You negated the downtrend. The momentum is turning up. The bias is up. Yes, you're not trending, but I often put, when you have an outside day, a lot of credence into that you made a change in the market. And that's what I think happened until today's low's taken out. And wherever that upper Bollinger Band comes in, just like it did back here, I'm going to look for resistance at that number. When you look at the gold-silver ratio, it's starting to break in favor of the silver. Now, it's going to change tonight on the settlement price because we already know where silver settled. It's going to be like the gold underneath that 18-day average of closes. And instead of us drawing this line down, it's going to go to the upside. Got it? Nothing's going to change that. What is the chart pattern going to be? It's going to be one of a lower low and a higher high. That's just the way it's going to come out. It's going to be an outside day up. The momentum is certainly pointing to the upside. The bias when you reopen tonight will be up, but when you settle, it'll be down. In the copper, you're just going flat here. And I think President Trump's comments today probably people dropped their jaw. I know I dropped mine when he said, no, even if we do a deal, tariffs might stay in place. It's got to be a negotiating ploy because why would China sign a deal to remove everything to get their economy going and keep the tariffs in place? Quotas might be different. They may come into place. I'm not sure about the tariffs. But again, our president has his unique way of negotiating. The market's hanging around this 18-day average. As I told you yesterday, the open interest in options is the largest that the Merc has ever had. So there's a lot of bets in this market as to which way the market will go. Many of the trade firms still think it's to the upside. I'd see resistance at 296.39, but once you break out of this range, a move's going to come at you. Could be down. What if there's no trade deal? When you look at the platinum, this has been a vertical rise as this market is looking at its sister, the palladium, the strongest of the metals. Not today in dollar terms, I understand, but it's just the strongest chart. It just stays over that 18-day average. It doesn't give you a real a consolidation. It goes a bit sideways and it starts breaking out on you again. And what do you have in momentum? You have both numbers here over 80 today. That's Wednesday. You had both numbers over 80 yesterday on Tuesday. And as I said, it's hard when you're right on the number, but I'll give the benefit of the doubt that the market has an embedded reading. It's a difficult call, which tells me until the red line gets under 80, pullbacks in this market under the Bollinger Band, I think the pros are going to be looking to buy it. A market that got smashed today, and notice where it went down to. I know a lot of people want to learn Bollinger Bands, but they don't take the time. You tell me where the market went down to and held on the first test of it. The lower Bollinger Band. You got to 95.17, that number 1740. 17.5 is how you'd round it. 1740. And you bounced back up now to 30 points almost from it. So I think the pros were taking some money off the table, but I think until today's high's taken out, the bears have grabbed control, and admittedly you have an oversold market that has hit a downside target. But if the Fed's out of raising interest rates, you got to ask yourself, what does that mean? And one of the things it could mean, and I'm writing about it, I already have written half my report for tonight, is the impact on the U.S. dollar. The next thing that the Fed said, if you watch their conference today, they're concerned about world economies, be it Europe, China. They're not thinking they're in recessions. I don't know that. I think that, Italy's in a recession. You've got another, I think it was Spain that's got some issues. There's issues in different countries at this point, but if you can get stimulus, and China's already doing that, and if you can get Europe to start re-stimulating instead of cutting off the funds as they did, well, I think that that's why the Fed's sitting still. What is the impact going to be as that happens? If they start coming up, is that good for the U.S. economy, bad for the economy? What's it do for the metal markets? Right now, what the metals got was the gift they wanted. They got a dollar that is, for the first time in a long time, broken to the downside in a meaningful way. That's what I think the market's looking at. I'm going to write about this tonight. You're going to be able to read about it if you start your day off with what I do. And by the way, how I start the day off is with my subscriber video. Now, if you haven't tried my research, this is a free offer. Go to our website, www.iraepstein.com. You'll see Ira's Market Research. Give it a try. Those of you that have had a free trial, you can either subscribe to it or don't get it. That's going to be up to you. I'd love for you to get it. That's how we do these shows. We can't pay for them, we'll stop doing them. It's that simple. We're doing okay, but we want you to come in and join our research. We think it's important. We're a brokerage company. We'll do our best to help you with your brokerage numbers as well. And as I said, you can get all this, you can give it a try. All you need to do is give us a call, go to our website, sign up for it there, or you can click right up here. If you're watching me on YouTube, it'll take you to that page. I'm Ira Epstein. Have a